Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, is the economy cool enough for our central bank to cut interest rates? And Canada is slow to adopt artificial intelligence. That's something that could cost us dearly. Plus, China sells cheap electric vehicles. Should we block them or invite them in? That's all ahead. First, for the week that was in business, it's time for the briefs. A read on the economy this week will be the last piece of information before a central bank decision on rates next week. The central question: is growth barely below inflation slow enough to satisfy a bank still worried about that rising cost of living, especially when you factor in population growth? And if so, does that all add up to a rate reduction? The Federal Competition Bureau is undertaking a review of the airline industry in Canada, a process that will ask for consumer input into a market study. The goal is to determine whether there's too much concentration in the market here. The Bureau said it comes after complaints about air travel have risen. Shareholders of Indigo Books and Music approved a deal that will see the retailer return to a private company. Trilogy Holdings and Trilogy Investments, which owns 56% of Indigo and are backed by Gerald Schwartz, spouse of Indigo founder and CEO Heather Reisman, will buy out the public investors. Its last report as a public company showed a decline of profit of 70% year over year. Canada has ordered 2 technology companies to dissolve their businesses here, citing concerns about national security. Bluevec Technologies and Pagani Technology must cease all operations under a law governing foreign investments in Canada. Bombardier is facing a lawsuit from investors who bought the stock in the fall of 2018. A class action against the Quebec company is being allowed to proceed. It alleges that Bombardier executives failed to make timely disclosures that affected its financial forecasts. The allegations have yet to be tested in court or answered by Bombardier. And those are your business briefs. Well, it does appear our central bank has achieved its aim of cooling inflation and has an economy that's just cool enough. Before we declare victory, though, what other problems might lurk ahead? Jean-Francois Perrault is chief economist at Scotiabank. Thanks for being with us.
You're very welcome.
So it does feel as though we could say the soft landing is upon us, and there's lots of expectations we may start to see rate cuts, if not next week, then the following month. I want to start there. Do you feel as though the bank is just about at the green light place of lowering rates?
Listen, I think we're very close to it. I don't think next week is likely, but certainly next week or the meeting after that, it's we're within spitting distance of lower rates. That appears to be clear, and the inflation data are kind of opening the door pretty widely open to that. The challenge is, the growth numbers are probably a little bit stronger than what the Bank of Canada would want, and that's kind of a perverse thing to say, but that might be the obstacle to lower rates in the very short run, and hopefully not much more beyond that.
Of course, we rarely get, JF, the super strong growth rates that you get post a big injection of stimulus. Overall, how would you rate the health of this economy? Better than the bank wanted, perhaps, but still not kind of gangbusters.
So this is a challenge. There's no question the economy is stronger than the bank expects, and there's no question the economy is stronger than almost everybody expected at this point in the year. It doesn't mean it's a strong economy, though. So there's this challenge on the communication side of saying, hey, things are stronger than we thought, but it's not meant to convey that things are gangbusters. That being said, when we look, for instance, at the data that have come in for the first quarter, then we'll get GDP data later this week on Friday. It looks like we're tracking the 2 to 3% range, which is not a bad number. When we look at the very, very preliminary evidence that we have for the second quarter, so we have, for instance, employment growth for April, which is unbelievably strong, 90,000 jobs created, very strong increase in hours worked. So that suggests that, going into the second quarter, that there is some economic momentum there. Again, not to say that we're going to blow the roof off anything, but there is more resilience and more strength in the economy than I think people appreciate when you're, not looking at the data as closely as folks like us and the central bank do.
Well, and this is an important point. People, of course, individuals will care mostly about their job, their own investment prospects, if they're lucky enough to have them, right? The value of their house and their other assets. Overall, do you feel as though this is not a bad period? As you look at, in the next year or so, would you say to people, we're not heading into a deep recession, that's the good news, and that things are okay?
Certainly, yeah. I mean, that's the sense that we get, right? If you go back to, say, 6 months or a year and say, listen, this is the likely thing that's going to happen in 2024, strong growth than expected, inflation coming down a little bit more rapidly than expected with lower rates, that would have been a bit of a fantastical scenario. But that's the world that we're in. Mm-hmm. So, it's actually not a bad situation. Inflation is moderating. Fantastic. Bank Canada looks like it's ready to cut. Fantastic. And growth is hanging in there, which is also fantastic. So it is a bit of a dream scenario at the moment.
And yet, we still, of course, have this affordability issue if it's now concentrated in housing, maybe less so at the grocery store and other places. Do you see relief on that front, or is that just going to be with us for the foreseeable future?
I mean, clearly there'll be interest rate relief, which will help to some extent. But we know the market is dramatically undersupplied. And our fear, and I think the fear out there is that as rates come down, that you get a pickup in house prices that could be meaningful given this massive gap between supply and demand. So the affordability issue is not put to bed, and it's not going to be put to bed for years. And I think people have to kind of anticipate that as you think about your financial plans and your kids' financial plans, to not rely on lower house prices as a way of achieving those. That's just not going to be the case.
Jeff, great to have you with us. Appreciate your time.
Thank you.
Jean-Francois Perrault is chief economist at Scotiabank. Still ahead, Canadians are slow to embrace artificial intelligence, and that could cost us. Stick around.